fix and flip is definitely more challenging, especially for, newer folks who are like, I'm going to just try a flip. No, like you might get eaten alive out there a little bit right now. You need to be kind of like that's your focus. That's what you're doing. And I always tell people too, like, true wealth in real estate is not made on those short-term stuff. Like, yes, you can build up some cash to do something with it, but the true game of real estate is that long-term buy and hold approach.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Natasha Phipps, is a Calgary-based real estate investment specialist and CEO of Wealthshare. You can find her online at phippsgroup.ca and wealthshare.ca. Natasha, thanks for taking the time out today.
Yeah, thanks for having me. Excited to be here.
It's great to have you on here. And I typically like to start off this show by asking folks how they got into real estate, but you're involved in a number of different segments. I want to ask you how you got started working with investors.
Yeah, I was lucky enough to find that niche pretty young. I kind of got lucky in real estate early on, but the first and foremost thing that got me into real estate was actually my mom. She worked at the bank and we lived in the country. So when I was, moving out of home for the first time, she really explained to me how a mortgage works and how, did I want to go pay down someone else's mortgage or my own, becoming a tenant or a homeowner. And that really got me going. And I was lucky enough at the time that real estate in Calgary was kind of really doing this thing. So through university and my kind of early years, I was doing several real estate transactions and got hooked pretty quickly. So by the time I got out of university, I knew that's really what I wanted to do.
Now, did you know immediately that you wanted to work with investors?
No, I knew I wanted to get into real estate in some capacity. I knew I didn't want to work in an office, 9 to 5, typical sort of lifestyle. But I knew I had made a significant amount of money in the investment real estate space. And at the time, there wasn't the access there is now to information or opportunities or groups. Now there's so much stuff. So back then I, really started thinking about what I loved about real estate, and in talking to people very quickly, that became what I wanted to focus my time on and how I knew I could best help my clients, whether it's their primary home or investment home. I think as realtors, we should be having that, moment to take a look at what we're doing with our money as an investment.
Yeah, and when we talk about the investment space, there's so many different segments to get started in and to work with investors in. Is there one particular segment that Phipps Group focuses on, or is it multiple different segments and active across the board?
Yeah, we focus on single family and into multifamily residential real estate here in Alberta. We're not specialized in kind of the other niches of commercial real estate. So really, long-term buy and hold real estate is the majority of our investors. Then we have our flippers and our developers and that kind of thing as well, but all encompassed in the residential space.
30-day, short-term rentals on under 30-day stays. Are those feasible up there?
So Yes, they are. So Alberta definitely has the least amount of restrictions in Canada on these types of things, but
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
the a lot of the buildings themselves now are, saying that's a no-go. So for most people doing short-term rentals here in Alberta, just west of Calgary, most people know the Rocky Mountains and Banff and Canmore. There is the ability to absolutely do short-term rentals out there. It's a whole different game. So short-term rentals work well there, but they can be challenging in the city unless it's single-family real estate. Then you're in control. You get to do what you want with your property.
As we're talking here, I'm realizing I think this is the first conversation that I've had talking with a Canadian investor, and I'm shocked about that. And I'm realizing, goodness, I got to ask some pointed questions. And when folks are looking for deals, I mean, I'm a Texas licensed realtor, but I've lived on the East Coast and I live abroad right now. Um, Typically the first place that they're going to check with is on market on the MLS, right? But in Texas specifically, everyone's looking at the MLS. And so right now, especially, you're not going to find, for the most part, you know, deals that underwrite on the MLS. How are most folks finding like a single family property to rent or to flip? And is it different depending on what they're looking for up there?
Yeah, I mean, the MLS is still the largest driver of deals, I would say. But the best deals, that you're going to find, especially if you're looking for a flip or a project or something, that's a little get your hands dirty type thing, is often found off of the MLS. And then more so when we move into multifamily real estate as well, a lot of those transactions are done off the open market. So having your realtor who has the connections, knows who's who and who's doing what definitely pays off here too.
That's a huge thing. I feel like there's this disconnect between realtors who work with investors and realtors who don't. But as someone who's done a little bit of everything, I look at it and I think that there's this opportunity, for every realtor, especially folks, I feel like anywhere in the United States, to send out referrals super easily, right? So if that's not your primary avatar of the person that you work with, but someone, hey, there's this distressed property here. I could send out this referral this way. Like that's a whole book of business that people are missing out on. I feel I do feel like people should at least consider working, with investors or with retail buyers just so that they could get that extra margin in their business.
Absolutely. And investors tend to invest in different markets, right? So having your kind of core group of referral partners in every major Canadian city or wherever you're sending your referrals to in the US is a great way to diversify, reach a new group of people, and another stream of income, of course.
I want to ask you specifically about some of the ways where folks are finding success in the markets that you're active in. You mentioned single family, you mentioned some multifamily as well. I've seen this trend recently, and don't know exactly how long this has been going on for. In Texas, where I'm licensed, not really away from fix and flip, but it's just a little bit more challenging to flip properties when you have like so much new construction going on in Texas specifically. Is the market similar up there? Is there not as much new construction? What's the effect that has up there?
Yeah. Well, Alberta has seen a massive influx of population from the rest of Canada to our market. So huge amount of construction going on in the last 5 years. So fix and flip is definitely more challenging, especially for newer folks who are like, I'm going to just try a flip. No, like you might get eaten alive out there a little bit right now. You need to be kind of like that's your focus. That's what you're doing. And I always tell people too, like true wealth in real estate is not made on those short-term stuff. Like, yes, you can build up some cash to do something with it, but the true game of real estate is.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
That long-term buy and hold approach. You can improve the property and do all these things to lift the value, but you really need to give it time as well. So new construction has been a big issue. And also like exterior developers from that are not, local to us have been trying to do projects here. And things don't really work the same here as they do in other markets. So certainly an interesting time, but a lot of competition out there on the rental side, resale side, new construction side.
I've also seen that more folks are getting into new construction, and it's not easy because you've got to be a developer, right? You've got to understand how to put a home up, which is different than, rehabbing a kitchen, right? So now you're dealing with soil testing and foundation, not to mention zoning and permitting issues that I know investors are supposed to pull permits, but how many of them do in some cases, and they just kind of get through this job before anyone notices. And so when you're doing ground up new construction, there's so much that goes into it. It's definitely another segment of real estate, and I've seen more people pivot into this. And one of the ways where I've seen it most is, someone who might be a flipper might partner with someone who might be in ground up new construction, and then they might do a couple deals that way as well.
Yeah. I think, there's certainly money to be made there. Here in Calgary, they're allowing more density than they ever have, which might get revoked, but right now it's here. And that has, sparked a lot of people to maybe I'll become a builder, maybe I'll become a developer. And my job in this space, how I look at it, is helping people kind of align their skills and their resources with the best strategy for them. And it's not for everyone. Like the level of variables that start increasing, the more risk really is, something to consider when you're getting into this space because the problems cost a lot more when things don't go quite right. Or like you said, things change, processes change, permits change. So yeah, really that alignment of strategy with the client is something that I love to spend time on.
Lately, I've been seeing a ton of people coming to me asking me if I can find them deals to make seller finance offers on. And I was almost like, where are all these people coming from? Commercial deals. I had people asking me, hey, can I make an offer on a gas station for them? Can I find them some small multifamily properties under 50 units? Have you seen this as well? Is this something that you fielded up there in Calgary?
Absolutely. I think, the how many ways to buy real estate with $0 has become a educational and marketing trend out there in the coaching world. And, does it happen? Yes. Is it, is it abundant and is there, huge amount of deals to be had? No, it really does take grinding it out there to find those sellers that are maybe super distressed or a property super distressed. I do see it more in the larger multifamily deals where there could be some level of VTB available, but usually that's not what these people are looking for. They're looking for the smaller stuff, exactly what you're talking about. And if it's a good deal, it's tough because you're competing likely with someone who can just pay cash.
Yeah.
So it's really challenging to find.
I've seen so many people reach out to me about this, and I know in the single family space, when I would be working with sellers and buyers who were interested in some type of sub two offer or some type of seller finance, and that we would have to make like 100 offers in order to get one of those to fall. And so if you put up enough shots, like one is gonna fall. But the other aspect of it too is that in the multifamily space here in Texas specifically, there's a significant amount of distress in operators because what happened like over the last 5 years is people just bought so deep. They bought thinking like, what's the worst that could happen? And then boom, COVID happens. And now there's a moratorium on rents. And then everyone's building. And then materials, increase in price. And then arm rates go up. So now you've got double the mortgage payment on these, properties with potentially tens, if not hundreds of doors, like what do you do? So there's a significant amount of distress from multifamily sellers as well.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Have you seen any of that? I know that that's not necessarily your primary segment, that larger multifamily, but have you seen any of that up there?
Yeah, I mean, our lending environment here is very different here in Canada than in the US, but certainly what we did see was kind of coming out of COVID, incentivized type of lending, which allowed for higher loan to values and more favorable lending terms, which put you in a very small box when things start to go wrong, right? And so what I think we're going to see here into the next year too was we were kind of at the height of valuations here in Alberta last year. And anyone who is kind of planning their projects around those rent rolls or those numbers or those expenses, it's going to look very different, especially if they're in the new construction space coming into next year or the following year, where those rental rates might not hit what they were hoping to hit. And so now
Yeah.
you might be a little upside down on your project, right? So in those scenarios, you might be able to get creative and be a problem solver and come to the table to these people with something that might be mutually favorable.
Pivoting a bit here, Natasha, how often do people come to you and say, "Hey, look, I'm interested in investing in real estate. Not exactly sure. I want to do this. I'm not sure if this is a good idea. Can you give me your feedback?" Versus, are they saying like, "This is exactly my buy box. If you can find me something in this, that I'm buying it." Is it, or is it a mix? Is it a mixed bag?
It's a good question. I would say, like more often than not, what they think they want to buy is not what they buy when we actually get into it, right? We actually start talking about numbers, figures, strategy, risk, all of the things that maybe they haven't quite thought of yet. And so, but that's what our job is, right? Our job is to help them identify that and to really try to set them up with success. Because the awesome thing about working with investors is they will keep growing and buying more real estate if things are working. So we take a high level of responsibility of trying to guide them in the best direction possible, and that's something that we do really, really well here.
I want to ask you, you mentioned briefly the lending environment is different. I'm woefully ignorant on the lending environment in Canada. Can you break this down to myself and to our audience? What's it like? And on some level, maybe contrast that with my experience uh, trying to get people approved across the states, which is it's very challenging in many cases.
Yeah, and obviously things weave over time here, but the largest difference in Canada is just the amount of lenders available is significantly smaller, and the federal oversight, excuse me, take a drink, is much. And so what that means is there is um, more oversight in terms of what a lender can offer, what can be, you know, put out there to the market. And so the list of your options is much smaller, from my understanding, than the US. And so it does make it more challenging to potentially find capital if you're out there looking for it.
One of the things that I've heard, and I wasn't involved in real estate at this point in time, but we had, the housing crisis, global housing crash, and then uh, around, and I don't quote me on this, but I want to say it was around like 2010, 2012 time frame. I could be horribly wrong there. There was this Dodd-Frank Act in the United States, which changed the way that loans were being processed. And so, previously in movies like The Big Short, you would see like people were just handing out loans, and that mortgage
Yes.
officers were making money hand over fist. And that wasn't that long ago. That was like 2006, right?
Yeah.
And so you go from that environment to where we're at today, which is, I don't, and I hate to say this, but I don't know that there's so many young people who are like super optimistic about homeownership in the United States, because it does seem like they'll go to a realtor, the realtor will send them to a lender, the lender will say, "Oh yeah, you're not approved." And now that I'm in the business and seeing it, I also know that there's a huge, variance between what one lender can do and what another lender can do, and there's down payment assistance programs and so on. But
Yes.
it does, especially for younger people, feel like this uphill hill battle in the states to home ownership.
Absolutely. Same here. I mean, the rate of home ownership here in Canada is like rapidly declining, and which is concerning. And I think it's so much more challenging to get approved. Interest rates are a problem. Rising costs of everything are a problem. Just what it costs to even get into the market, period, is a huge issue here in Canada. That's why a lot of people have actually been moving to Alberta, is because it's more affordable to live here. We have a lower tax environment, where you can actually get by with less here. But that is still a huge challenge. It's really taking like the our parents to help the younger generation to get going into home ownership. Otherwise, they may not have a hope until they're in their 40s or 50s, rather than it used to be in your 20s or 30s. So it is a huge.
There's this on ramp that I think people were kind of expecting. I'm going to do this, go to school, this happens, and then home ownership, and that seems to be now, a crux of almost a cultural conflict between people, where we're saying, well, when is this going to happen for me? And honestly, that's 50% of the reason why I got into real estate was because I was seeing how difficult it was. And in my mind, I was like, well, if I can't beat them, join them. Like if I can't figure out how to do this outside of, this real estate space, let me figure out how to do it. And then the other half too was I was working in the automotive space, and I just did a Google search, like, what are the ways to build wealth? And real estate was just what Google told me. I thought I was alone in searching that, but apparently a lot of the guests on this show have told me that they've come into real estate through a similar way. But
Yeah,
I do
or
want
the
to
Rich
ask,
Dad Poor Dad book. That's a big
which
one.
that exactly, that's another one, right? We are coming up on time here, though, Natasha. Any new projects that you're working on, or how can our audience reach out to you if they're interested in reaching out to you or your team?
Yeah, so my kind of largest project in the last couple of years with two of my co-founders, Rodney and Monique, we have founded a private REIT here in Alberta. So I am super passionate about people investing into real estate, realtors investing into real estate, and so um, I still have my real estate team, but Wealthshare allows a passive way to invest in real estate. And that's something that, more sophisticated investors, we kind of start out doing our own active thing, but then we learn that we need to be able to diversify and we can't do everything ourselves. So we allow a vehicle to invest into real estate with $5,000 or more using your cash or your registered funds. And we're also teaching and building a community with it. So we have about 300 investors in that community now, and started a few years ago with it. So that's kind of what I'm working on now, and trying to translate everything I've learned over the last 20 plus years in real estate and trying to make that more accessible to the average consumer.
Natasha, thank you so much for your time today, and thank you for coming on the show.
Thanks for having me.
Thanks for joining us for today's show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing on your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. You can also check out the show's notes for access to free resources, how to get access to world-class lead generation, and even how to work with me directly one-on-one. Don't forget to subscribe so you never miss another episode. See you on the next show.